Alrighty, good morning, everybody. It's Thursday morning, July 27th, 2023. Let's go ahead and jump into our review for yesterday so that we can quickly get into our pre-market for this morning. We obviously are getting a nice little breakout right now, but let's go back and take a look at what we were talking about yesterday. So yesterday, in fact, I'll go ahead and bring up the higher time frames here. When we were coming in yesterday, we saw a potential bearish divergence from the daily high. Remember, we talked about how it pushed just a couple ticks higher, but the RVI was a little bit lower. That was a typical bearish pattern, and we weren't sure if it was going to follow through, but we definitely started to see some clues up there. The 4-hour, I believe, coming into yesterday, we also had that bearish signal from the highs, and then the hourly, I believe, was the only time frame that wasn't quite giving us a really sexy bearish signal from the highs of the day before there, but we had our hourly and our 4-hour and our daily. And so we said there was a good clue that maybe the market would try to pull back. Of course, we're in the context of a really strong bullish market, but that was the idea yesterday. We had to kind of see who was going to win out. And there were some clues for a pullback on the higher time frames. So we did pull back from the highs of the day before, right? It came down. And then we opened here, and while we were doing our pre-market, we were holding our first expected support zone down here. And we had our scaffolding, we had a strong retracement level down there, and you even saw that I remember it was yesterday, was it? Right? I think yesterday I bought that right there. I got a decent push out, but then I believe it came back, stopped the rest of my position out. So I got the first contract off, made a little bit of money. But let's take a look. So we pulled back, held our first expected support zone coming into the open. So probably could have bought that, took it right up to VWAP, made a little bit of money. It kind of skirted, it held the scaffolding, but notice again, this is again that bumper type of action. Like when you're at the bowling alley, you throw those bumpers up and it just bounces back and forth between, the two sides of the bowling lane. Same thing here, it happens all the time. We got these beautiful holds off our levels. Holds the 200, holds the scaffolding, holds the 200, comes up to VWAP, holds the VWAP, comes back to the scaffolding, holds the VWAP, starts to traverse a little lower. Notice as we break, comes back to the back end of the scaffolding and the FMA and tries to break lower. And then it bounces, holds the scaffolding, comes back up. We get no sexy hold here from VWAP. But notice, and this is actually going back to what we talk about pretty often here, these retracement levels. So the second retracement was the level we were dealing with as the market opened. The next was down here around 45.78. And again, stair step, 38 to the tick, bounces pretty significantly, 50% retrace, bounces significantly. And then finally, just around the news event, the FOMC announcement, it pushed down and bounced directly off the 61.8. So again, it's this stair step, 38, 50, 61, and then from there, we get the biggest bounce of the day right off the 61.8 retrace. All right, and there's still trouble. If we really zoom into the weeds here, has trouble off the VWAP again for multiple pullbacks nearly to the tick. Get a little peek through, holds it, and then comes down. And then finally, as the market's holding the 61.8 retrace again of that previous big leg that we were measuring, we get the big bounce all the way up. And what happens? We come right up to the high of the year and the high of the day before, which was a couple ticks lower. We talked about that. And got a nice bearish pattern, at least on the 512, and tested it multiple times nearly to the tick. That was our next expected resistance zone. Comes down, holds the 200 for a bounce, and then finally we get the crossover, which if you guys have been in the weekly webinars, we talked about this strategy. There's the crossover between the two moving averages, and then from there, holds the back end of the 200, holds the back end of the FMA, and then starts to sell off back to retest the 61.8 zone. And what do they have to do? They do this pretty often. Oops. They peak right below it and then bring it back up. And then towards the end of the day, there's the 200 hold, the 200 hold. There's the VWAP hold. and then right into our pocket of expected resistance, which, by the way, earlier on we came right to, pulled back, and held the FMA to bounce back through it. And then if you look into, again, get into the weeds here, when the market, and let me get rid of these lines, when the market broke out, pulled back right to the holy orange power level to push back up to test the high of the year. So pretty awesome stuff if you ask me. And then at the end of the day, notice all these holds are right around our scaffolding. And then finally we come up and hold this zone here, come down and hold the scaffolding to the tick once again, hold the VWAP once again to the tick, and then it tries to break out, right? And then that's what brings us into this morning. So there at the end of the day, pull back right to your fast moving average, and then they fail just shy of the high of the day, right? Come down, hold the FMA, and then close. And let's bring this back, and then closes right around the 50% of the day before and the holy orange power level. So again, we had some clues for a pullback coming into the open yesterday. The market held VWAP and continued to sell off, came all the way to the 61, and that's as far as the sell-off got. So we got about 46.10 down to about 45.80 as the total pullback there, so about 30 points. And then the bulls surprised everybody and jumped back in right at the FOMC announcement and popped up to retest the high of the day before there. And now we're getting the continuation higher. So the market never was able to, and I'm going to pull up the higher time frames here so we can see the larger context. The market was never able to really get through the 61.8 of the leg we were measuring, right? So this was the multiple time frame bullish signal on Monday. Remember, on Monday we had all time frames showing for the bulls. We had a daily bullish signal, we had a 4-hour bullish signal, we had an hourly bullish signal, and our expectation on Monday was for the attempt to break out to the upside. And we're getting the continuation right now. So we got the push, we got the pullback to the 38 and the bounce, the pullback to the 50 and the bounce, and then the pullback to the 61 from yesterday, and that little shy peek through, and now we're breaking out to the upside. So this signal on Monday, if you just bought the market maybe with some options, expecting the bulls to continue to push, given we had a multiple time frame bullish signal from that low, you would be up now, let's say 45.70, you'd be up about 60 points as we talk. And this could be the beginning of a much larger push that we're dealing with this morning. So that basically brings us here into this morning. And just to look at what happened here in our Globex session, well, what do you know, guys? In a strong bullish push, we talked about this in one of our weekly webinars. You get a ride nearly to the tick, and that's what happened here all night off the FMA, right? So literally every pullback to the FMA in the overnight session, except for just a couple minutes ago, held nearly to the tick the whole way up. Nice, easy overnight action if you were trying to trade that, especially those over there in Australia. And now, because that was basically their day. And so now here we find ourselves pushing to new yearly highs. So that brings us into this morning's pre-market.